For years, silver traded inside an invisible cage. Prices moved, charts fluctuated, headlines came and went, yet the real value of silver never surfaced. But then something happened. A single moment when the market blinked and the illusion cracked. Analysts called it ghost inventory, silver that supposedly existed on paper but rarely in physical form. A bookkeeping mirage, a convenient number, a placeholder for confidence. Until the day it couldn't hide anymore. The futures market always believed the metal was there. But demand kept rising and withdrawals accelerated until the paper market collided head-on with physical reality. And reality always wins. For decades, traders relied on a fiction. That supply was abundant, accessible, and controlled. But beneath the surface, every ounce quietly moved away into vaults, into hands, into nations. When the system ran out of metal to lease, deliver, or reshuffle, the facade fell. No more borrowed ounces, no more temporary supply, only the truth remained. This wasn't a shortage, it was a reckoning. A market finally forced to speak honestly, perhaps for the first time in decades. Silver is no longer just a precious metal. It's infrastructure, it's energy, it's technology. It's the wiring of the next industrial age. Solar manufacturers sounded the alarm first, then electric vehicle producers, then national mints. Demand surged beyond every projection, faster than the supply chain could understand, let alone match. Mining couldn't simply increase production. Silver is rarely mined alone. Most of it comes as a byproduct of zinc, copper, and lead, and you cannot ramp up byproduct mining just because one metal is in crisis. Every cycle ends. Every illusion has an expiration date. Cheap silver belonged to the old world, a world where demand was slow and supply seemed endless. The market entered a new era not driven by traders but by necessity. Silver became a strategic asset, a national resource, a geopolitical lever. For years, the price was controlled by liquidity, derivatives, and leverage. But you cannot suppress a physical market forever. Eventually, kilograms outweigh keystrokes. A critical moment arrived. Contracts demanded delivery and the metal wasn't there. Traders scrambled. Premiums exploded. Allocations tightened overnight. Spot price became symbolic, a number on a screen detached from reality. The real price lived in the physical market, where premiums soared far above official charts. Wholesalers reported empty shelves. Refiners saw backlogs stretching months. Retail buyers rushed in as if sensing something historic. The last time silver moved like this, the world witnessed one of the greatest squeezes in financial history. Today's conditions are eerily similar, but far larger. This time the buyer wasn't a billionaire. It was a constellation of forces, industries, nations, funds, and everyday people, all moving in the same direction. Mints ran at full capacity. Refineries pushed 24 hours a day. Yet demand surpassed production by a wide margin, pushing the system into structural deficit. Economists finally admitted what stackers knew for years. The world was pricing silver as if it had no purpose. But the world changed, and the price stayed behind. Countries with industrial ambitions recognized a truth: control silver, and you control the future. Stockpiling became strategic policy. Green energy isn't possible without silver. Every panel, every EV, every power conversion unit depends on it. Without silver, the transition stops. And now the market stands at the edge. Supply tightening, premiums rising, inventories draining. The system cannot hold this pressure forever. The silver market didn't break suddenly. It fractured slowly, with each shipment delayed, each inventory drawdown, each refinery backlog. Small cracks spreading silently. For decades, the futures market commanded the price. But price is just a number, supply is reality. And reality no longer obeyed the old system. Unlike investors, industries cannot wait for dips or manipulate timing. Solar factories need silver every week. Car companies need it every day. Supply delays meant production paralysis. Corporate buyers aren't emotional, they're strategic. When they fear shortages, they don't buy a little more, they buy everything. The first sign wasn't the chart, it was the premiums. When buyers willingly pay 40%, 60%, even 100% above spot, it means one thing: the posted price is fiction. Refiners warned that incoming raw silver supply was thinning. They ramped production, added shifts, expanded capacity, but deficit outran them. Stackers knew, retail investors knew, industry insiders knew. But the broader financial world finally opened its eyes, and that changed everything. When mainstream funds entered, the narrative shifted. Silver wasn't a relic or hedge. It became a growth asset, a critical commodity of the next economic era. Silver is not optional for renewable energy. It is essential. Gold stores wealth, silver powers revolutions. Even if price doubles, even if it triples, demand does not stop. Because modern civilization runs on silver, knowingly or not. The old pricing model assumed abundance. But assumptions don't fill warehouses. Markets reprice when reality invalidates yesterday's beliefs. ETFs bled ounces. COMEX inventories hit multi-year lows. National mints rationed supply. The drain wasn't temporary, it was structural. Mining CEOs admitted what analysts feared. Without massive investment and years of development, production cannot catch up. Not now, not soon. Silver ore quality declines every year. More rock, less metal. More cost, less yield. The easy silver is already gone. Nations quietly compete. Whoever secures silver now secures energy dominance and industrial self-sufficiency. For decades, countries once held silver in vaults alongside gold. Many sold it off in the 1990s. Now, governments race to rebuild what they foolishly discarded. Silver is no longer a commodity. It has become strategic infrastructure, critical supply, national insurance, a metal that policymakers cannot ignore. Electronics companies felt it first, then automakers, then energy producers. The shortage spread like a shadow across the global supply chain. Years of artificial pricing suppressed exploration, investment, and development. Now the bill has come due, and it is enormous. Analysts who mocked silver now revise their forecasts. Banks lift targets. Funds rotate in. The narrative changed, and when narratives change, markets follow. Silver markets crossed a line they cannot retreat from. Inventories are too low, demand too high. The equilibrium of the last 30 years has fallen apart. Price discovery is not a spike. It is a revelation. It is the market admitting, ounce by ounce, what the metal is truly worth. A wall of global buyers enters the market. Manufacturers, sovereign funds, institutions, and millions of individuals, all seeking the same vanishing metal. Supply agreements become competitive. Factories attempt to lock in multi-year contracts. Nations negotiate directly with miners. The race is on. For years, paper silver dominated. But when physical supply thins, the power shifts. Real metal, not promises, sets the rules. The premium gap becomes impossible to ignore. Investors ask, if physical is worth triple spot, which price is real? For 2 decades, silver was predictable, stable, quiet. Today it is none of those things. It demands attention and commands respect. Electronics, medicine, solar, defense, nanotech, aerospace, crypto hardware. Every modern industry relies on silver's unmatched conductivity. Powerful economies quietly reallocate capital to secure metals. A global shift is underway, not publicized, but monumental. Silver isn't just economics, it's geopolitics. Nations dependent on imports face vulnerability. Those with supply gain leverage. A global technology boom requires unprecedented silver volumes. But Earth is not producing enough, not even close. If silver price rises, the world cannot simply refuse to pay. Civilization depends on it. The economy adjusts because it must. Retail investors become an unstoppable collective force. Each purchase small, but millions of purchases enormous. A decentralized global squeeze. Liquidity evaporates first in thin markets, then wholesale, then institutional. When silver dries up, no algorithm can refill it. A sharp rise is not a bubble. It is the market climbing toward true value. To price silver without industrial shortages is to ignore physics. Investors fear missing out on price. Industries fear missing metal. Only one of them is existential. The world reaches an unavoidable truth. Silver is not priced for reality, and reality always corrects violently. The age of suppressed prices is over. The age of discovery is here, not just for investors, but for the entire global economy. Price discovery isn't coming. It has already begun.